Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And a survey came out today on the world's billionaires. And I was surprised. There's about 2,188 billionaires in the world. What's more surprising is in the U.S., there's 535 billionaires, of which about 95 live in New York. But in China, and here's a surprise, they've surpassed us, 568 in China with 100 in Beijing. What's going on here?
Well, gosh, I mean, the U.S. needs to pick it up. We can't be losing to China in this race. We got to have more billionaires than them. Come on.
We got to work harder. And what's actually going on is that in China, a lot of businesses growing and so forth. The richest man in China, he's worth $26 billion. I mean, not surpassing Warren Buffett or who's turned to Microsoft? Can't think of his name.
Bill Gates.
Thank you. Yeah, Bill Gates. But still, $26 billion. That's a very rich man. And what I was surprised about was in Moscow, they lost 7 billionaires. Why?
Commodities, oil, and one country I'm kind of curious about too. They didn't have the data on it, but Saudi Arabia. They have a lot of rich princes that came about during the oil, revolution. Right. I'll call it.
Yeah, Saudi Arabia, probably Kuwait. A lot of the Middle Eastern countries have probably lost a lot of billionaires as well. Yesterday we talked about small businesses, like 27 million small businesses in the United States, how 55% said what they saw bigger revenue. Well, today the Small Business Optimism Index came out, down a little bit. It's like 92.9 in February, 93.9 in January, so down a little bit. But what the positive side was employment. Employment's looking very good. It's actually increasing. But there are some problems in the report as well.
Yeah, well, earnings were trending weaker, and the reason earnings were trending weaker was higher labor costs. And while this does hurt the business, it is good for the economy because there's wage inflation. What's that mean? The consumer, those employees of those small businesses now have more money in their pockets, and they can go out and buy goods.
Yeah, they can go to dinner, go to the movies, spend money. That stimulates the economy. So while it's a negative for the earnings trend in businesses now, it's a positive for the economy, which is very good. Well, I'm very excited because today is a newsletter day. It goes out. We get a lot of detail on one company. The company we talked about today is Disney, the symbol DIS. Now, as you can see, the 52-week range had a low of $86 a share, high of $122. Right now, about $98 a share. And I like Disney. I like their movies and so forth. They've been on a streak of having all these great movies. And if you look back in Disney, you don't always produce great movies. There could be a problem coming up. Looked pretty good in the past.
Yeah, well, I mean, sales were up 9%, earnings per share up 19%. I'm guessing a large portion of that had to do with Star Wars. They had over $2 billion in box office revenue from Star Wars, which is pretty amazing. One of only 3 movies to ever hit the $2 billion mark. Wow. The company does have debt to equity of 43%, but price to tangible book value is over 50.
And that's kind of dangerous because price to tangible book means tangible assets. So this means they have a lot of intangible assets, and intangible means you can't touch them. It's not like a car or a building or machinery. They're untouchable, which they can be dangerous because they can be written down, hurting the equity of the company.
Yeah, intangible assets are very hard to value, which is always very concerning. And Disney has Mickey Mouse, which is the quintessential example of an intangible asset, and they have all those other movie characters and patents, and a lot of intangible assets.
Right. The earnings per share for September 2017, $6.28, gives a forward PE of 15.6. So what this tells us, it's not a sell, it's not a buy, it's a hold at this point in time. So if you had it here, you probably should have sold it. If it goes up more, keep your eye on it. You should sell this one and buy something else around 10, 12 times earnings. So, all right. So if you'd like to have a consultation or talk about your investments, maybe you're not happy with the current advisor, you're not sure how to do this yourself, what you want to do is give us a call, 858-546-4306, or go to our website, smartinvesting2000.com.
And be sure to go to smartinvesting2000.com now to sign up for our upcoming workshop, How to Invest in 2016. We'll be hosting that workshop on Saturday, March 19th from 10 a.m. to 12 p.m. at National University in Rancho Bernardo. And at that workshop, we'll be analyzing a stock that could potentially be a buy in our portfolio. That company is locally based Qualcomm. We'll be reviewing stock fundamental analysis and why it's successful, explaining when to buy and sell a stock, and also very important, showing you the 5 common mistakes the average investor makes.
And we've had thousands upon thousands of people come through these workshops, and everyone has always learned something. So don't delay. Make sure you go, sign up now, and we'll see you Saturday at the Smart Investing Workshop.